cold, but we can always count on earnings season to bring the heat. And this earnings season is going to be one of the more interesting ones in recent memories, just because of everything that's going on in the economy and in the global economy as well, and where these stocks are at after huge rallies over the last almost 2 years now after the pandemic started. So what should you be looking for this week? A lot of big cap companies reporting, and I brought 5 interesting names, some of which are not on the decline, that you might want to tune into just to see what's going on, because not everything is selling off right now. So let's see what they are. So the first stock is Visa. I show it every quarter, ticker V, because while it has this perfect 5-year track record, it actually has not missed since its 2008 IPO. That's going back years and years and years. So this is an incredible earnings surprise track record. I don't recall any other company ever doing it. Every quarter I say, can it keep doing it? A lot of people say don't curse it, but so far my question has not cursed it. It has met or beat every quarter, even during the pandemic. Very impressive. Now, what's going on with the shares? It's been one of the big winners since its 2008 IPO as well. And you can see here over the last 5 years, it's kept following that trajectory. But it got very expensive, trading up there around 40 times forward. So in 2021, we finally started to see this pullback as a lot of these financial transaction type firms had the sell-off. It rallied a little bit, but starting to pull back a bit here again in 2022. Now, this has brought its forward PE down under 30 to about 29. And so the question is going to be, how cheap does the street think it needs to get before some investors pile in again? But this is one you want to watch on the payment side, along with MasterCard. Both are reporting this week. And this is going to be the big one to see whether or not they beat again. Then we're going to switch over to the chemical side. So suddenly chemicals are in again. And most people aren't watching any of the charts. So I decided to pull out Eastman Chemical this week because they were one of a couple chemical companies reporting earnings. You can see they have a pretty good earnings surprise track record, especially after getting by this difficult period here in 2019. Then they started, putting together some meets or beats along the way. They did miss here barely. That looks like only maybe a penny or two of the miss there in 2021. Shares have rallied again. And so we'll see if they, can bust out here to another new 5-year high. They're cheap, trading at just 12 times, which says something compared to the rest of the market. They did announce a really big share buyback plan. They expected to buy back $1 billion worth of shares in 2021. They have a $2.5 billion authorization program still ongoing. So this is definitely one that if you're interested in the chemical side, you might want to tune in to kind of see what's going on. And we'll see if this can get a breakout on this earnings report, or if it's going to pull back along with the rest of the market, maybe have a buying opportunity. Then we're going to switch off to the equipment side, Caterpillar. So you can see it too got a big boost off of the pandemic lows, and then it too pulled back in 2021. It's kind of went out of favor, got a mini rally just like Eastman did here at the end of 2021, but is pulling back again here a bit, but still remains up for 2022. So where does this leave us? It's trading at 17 times, so not altogether expensive compared to some of the tech stocks and other growthy names, but not altogether cheap for Caterpillar. If it pulls back some more, would get more in the value range around 15 times. So if you want to know what's going on the construction side, this is definitely one to watch this week. Then we're going to head over to big oil, the first of the big oil companies to report on the producing side, Chevron, ticker CVX. And you can see it had this initial sell-off like everything did on the coronavirus pandemic. Got a boost, but all of the energy producers slid here into November. Then they got this big beat here. Wow, this is a massive beat. But the shares started to rally again on the vaccines. So then we had shares rallying, crude rallying on the vaccine, return to normal coming. Then we had some difficulties in 2021, Delta outbreak, various other things, people concerned about demand again. But then end of 2021, crude took off again to new 7 or 8 year highs here, with WTI back up over 85. So we're starting to see these big beats as the analysts can't really keep up. This is another big beat. And now here we are back close to the 5-year highs, but not quite at this breakout back here in 2018. So do I think the energies, big oil, the producers are going to make new highs? I think so. So that's something to watch here. Now, how cheap is it? Chevron's E, the earnings side, is on the increase dramatically because of crude and natural gas prices. So the E is up, and even with these shares rallying, still has a low PE of just 12 times. That's looking pretty good. And it's put together those 2 beats in a row. So we'll see if it does it again for the third quarter here. But really, that kind of the outlook and what they're going to do with all this big free cash flow is what I'm going to be watching with a lot of these oil companies. Then we're going to switch over back to retail, which we are starting to get a few of the retailers. And my pick this week is VF Corp. Not many people know of VF Corp, but you definitely know their brands. Their 3 biggest brands are North Face, Vans, and Timberland. They have a bunch of others as well that you probably know. Vans has been red hot, and I expect that they had a very good holiday season. So that's something to watch. But these shares, like a lot of the retail, kind of peaked over here in the spring of 2021 and have been selling off. And then we're getting some weakness here again in 2022 with the shares down 7 or 8% to start the year. So not as big a sell-off as the tech names, but still a sell-off nevertheless, and well off the highs there of 2021 and not even near the highs of the pre-pandemic. So what about valuations? Am I getting a deal on VF Corp? Not really. Shares still trading at 21 times. So I would still like to get a lower PE on a company like this before I dove back in. So I'm going to be watching to see what they're saying about, labor issues, cost inflation, the supply chain issues that have plagued during the holidays. Are any of those clearing up? This is a big one for the retailers, and we're going to want to tune in to see what's going on. There's so much more going on than just a regular earnings season right now, but we're going to get all these companies in the mix telling us what's going on out there. So you want to tune in. Be sure to listen in on their conference calls. That's what I'm going to be doing every day, just to see what the companies are saying about all the issues: inflation, labor issues, supply chain, the overall economy, everything. And if you want to know when something is a deal, you might want to tune in to see if the insiders are buying their shares. Once they report earnings, usually the window to buy is opened again by their compliance departments. And so they're able to buy shares too at that point. So you might want to check into that and see if your favorite company, if they have sold off here, might have some insiders starting to dive in there, because that'll be a sign that it's oversold. So keep all these things in mind. Follow me on Twitter and on StockTwits, because I'm going to be watching those insider buys along with the earnings charts. And I'm going to be bringing you all these earnings charts throughout earnings season. So we have a long way to go. We aren't even at the height of earnings season yet. That'll still be coming in the next couple of weeks. So be sure to get all of our earnings all-stars charts. You can get them all on Zacks.com/YouTube. Subscribe to our YouTube channel so you don't miss a single thing. And I'll see you again next week with some more charts.